Hi everyone, welcome to my channel. My name is Fifi and this is my journey to financial freedom. If you haven't already, please hit the subscribe button. I would love for you to join me on my journey and see what I'm doing. So the hot topic this week is property prices. Is the housing market crashing? What's going on? Should you buy? Should you sell? Are you going to invest? Are you thinking of buying a new house? What is the deal? What is the situation? As an investor, the scaremongering is quite sensational. You come across phrases like boom, bust, crash, things that really ignite emotion from within. And I'm a little bit guilty of doing that in previous videos as well. But I think we need to kind of filter it down and tone it down a little bit, because why are we getting over emotional about this stuff? So what is the deal with house prices then? As the pandemic hit, we're already in a correction phase, so house prices were generally dropping. Everyone generally believes that the freeze on the property market at the moment has killed it. No doubt there will be after effects and hardships, and property related businesses have challenging times ahead. So for example, you're talking about the kitchen showrooms, the estate agents, the building merchants and the DIY stores, and even restaurants, for example. It's too early to tell how that will impact property in general. The market is being ignited slowly back to life, and our government has gone to great lengths to implement strategies that will automatically stabilize the market. Rishi Sunak isn't a fool, and neither are his team of economists that are modelling the UK back to life after lockdown. At the moment, all the datasets have been frozen, so we don't really know what the true impact of the pandemic is. But what do the experts think? Well, in March, new buyers and instructions collapsed in a way that we had never seen before, but that was mainly because shop doors were closed. The run-up, house prices were already falling, but that's mainly because in real terms, sentiments were already quite high. As time goes by, property prices will be driven by low interest rates, wage growth, and demand for property. So let's consider the factors then. The interest rates are currently at 0.1%. So that means that mortgages are available at lower rates than inflation. So you're technically being paid to borrow. Unfortunately, unemployment will create the biggest problem, because people will either be forced to sell, reconsider whether they're going to move up the housing ladder, or even downsize. Savills, the self-proclaimed leading property agent, claims that there was a 15% drop in GDP this quarter and an 8% rebound in the subsequent quarter. Unemployment is bopping between 4 and 10%. At the same time, the government's approach to the job market and mortgage holidays means that there are stabilizers, automatic stabilizers in place to ensure there is no huge crash. So there are factors that play on both sides of the equation. Having said all of that, experts predict a 5 to 10% drop in house prices this year and then a steady increase. So let's dig a little bit deeper. Savills predicts that London and the South East will continue to underperform compared to the Midlands and Northern UK. In fact, London has started to show good value. Prices were down about 20% pre-lockdown, and that was due to changes in tax and also Brexit. However, the pandemic has changed people's attitude and behaviour, so where people would typically might want to buy in London suburbs are suddenly considering buying outside in the countryside. Spending all that time at home, it shows you what is lacking and also the idiosyncrasies of life. There's been a renaissance to rural locations, so people with children might want to have gardens. Working patterns have evolved and society is accepting better working from home models, but there will always be a preference for urban locations. The younger population, the entertainment industries, foreign demand will always be there to drive the urban market. Generally, there is always a mismatch between the sentiments of buyers and sellers. Buyers are full of pessimism and sellers are always full of optimism. So closing thoughts then. I know I haven't made any comments on REITs or commercial property, but that's because I don't invest in those. It is a big consideration, as there will be a huge change as the economy changes on the impact of what that has on the commercial segment. However, on the residential side, your property is your home or it's your investment. So think about it. If you're thinking about it or you're umming and ahhing about whether you should buy right now or not, crunch the numbers, make a hard, fast calculation on rent, mortgage and maybe affordability, and eat the frog basically. Remember, a property is a very long-term investment and will still be standing post-pandemic. Please feel free to like, comment, subscribe. Would love to know your thoughts on all of this. But until next time, cheers guys, bye.